All right, welcome back to the show. It's the 6th of April. Want to check in on financial markets. It's chaos out there. Trump's tariffs have spooked the world. Trump's disrupting the world. Trump's disrupting the globalization system that's been in place at least for the past 25 years and worked on for much longer than that. The real kicker into globalization was the turn of the century when Bill Clinton signed permanent normal trade relations with China, and China sent it to the WTO, and we're off. But of course, this began in the 1960s and 70s as well. Trump is disrupting that system, the rules-based system, the GATT system, the Uruguay round system. Because of America's massive trade imbalance, it's really disrupting markets, and especially equity markets. Got a big sell-off on the week in the S&P 500 from 57.78 down to what is now, with the futures trading in Asia, down to 5,096, a drop of 680 odd points in just a few days since the second. The futures are trading overnight in Asia. They'll be traded overnight in the Middle East, Europe, and of course, we'll see the cash market open up at 9:30 a.m. Monday morning. Futures tend to be directional when it comes to the cash market, so could see a big gap down in the morning unless we recover somewhat here. There are already indications that many countries are contacting the Trump administration to negotiate trade deals. Reciprocity may be working here. You drop your tariffs, we'll drop our tariffs. So big sell-off for sure in the equity markets. Again, I prefer the S&P 500 over the Dow. Dow's a little bit of an anachronism. We're still well above where we were post-COVID, but we have some levels to pay attention to down here. 4,820, just below here, 4,890, where we're currently trading. 4,820 below. Watch after that, 4,551. We have a pretty strong level of support at 4,138. That would take us back to all the way back to 2021. So these are some levels to pay attention to on the downside. I think for the next couple of days, this might be a sell or rally market. We see the Fed come in, will quickly become a buy the dip market. There's opportunity here for sure. Below, the next really big level is 3,653 below for the S&P 500. Want to check in on the fixed income bonds. Bonds are rallying. Safe haven status. The U.S. bond market always is in the times of turmoil. Buy U.S. bonds. Bond prices and interest rates are inversely related. So when bond prices rise, interest rates fall. You can see that very clearly in the U.S. 10-year. The whole yield curve, of course, has shifted down. We're back to inversion in the yield curve, 1 month through 10-year. 10-year trading at 399 right now as we speak, the futures market. The high for the week, this past week, was 422, the 10-year yield. Sold off sharply on the back of the sell-off in equities, rotating out of stocks and into fixed income. Again, trading just below 4% here. We have some levels to watch out below here that are pretty strong. 394 is a strong level. Look to sell bonds there. Remember, if I'm talking interest rates going up, I'm talking bond prices going down and vice versa. So 394 is a strong level. We get interest rate support, so price resistance. And then below 394, we can look at 390, and then below 390, we can see 387. So we have 3 or 4 strong support levels from the interest rate perspective, resistance levels from the bond price perspective that we tested already this week. We bounced off 387 already. Below 387, 365 is a nice level. 365, 3.65%. Below that, 338. And then a really strong level at 264. Of course, we haven't seen those levels since the COVID days. So we're not likely to go back there, but below here, 3901. Look at 365. 365 is a good level to look for here as well. All right, checking in on currency markets real quickly. Dollar mixed on the back of this chaos of the past week. Tariffs good for the dollar, bad for the dollar. Checking the U.S. dollar index. Well, it went off its recent highs of 104 and a quarter, trading at 102.52 right now. Had a big sell-off on the 2nd of February, the day that Trump announced his tariffs from 103.85 down to 101.40. So there's a good level for you below. We're trading 102.90, so quite a rally off that low. We plunged down, found support at 101.40, rallying back up ever since. We set a little resistance level here at 103.13 above this level of 102.52. Below there, below here, the next level below 102.67-ish for support in the US dollar. The most recent highs for the US dollar in terms of the index, 109.64 in January 2025. So a huge sell-off on the back of the Trump team taking office from 109.64 down to 102.54. So that's a pretty big move. Check in on euro against the dollar, trading 109.90 as I talk. The higher this number goes, the weaker is the dollar. Remember, euro is a dominant currency. Euro against the dollar is $1.10 per euro. Off the highs that we saw on Wednesday and Thursday, reached a high of 111.18 euro against the dollar. Prior to that, we were trading in a range kind of stuck 107.90 to 108.85, 109. We played that range for quite a while, broke out on the 2nd of April, of course, in the back of the Trump tariffs. We blasted through a bunch of resistance levels on the way up. And those will become strong support levels on the way back down, of course. So above here, this 109.96 level, we're looking at 111, 111.63, 112.27. Not a whole lot. We cut quite a gap moving from the 110 up to 111. So pay attention for that. Down below, you want to pay attention to 109.40. Below there, 108.70, 107. So you got some gaps here down below. Checking on dollar yen real quick. All right, dollar yen trading 145.10. Off highs like last week at 150.23. And the yen had been pretty stuck in a pretty narrow range, 147, 151 for some time. We broke off to the downside, breaking below 149.18. We put a new recent low, 144.90. So that's a level for us below 145.17, 144.90. On the upside from here, looking for dollar yen, 147.32, 147.60, 148.40. Couple levels below this 145 level. Look at 142.20, 141.80. Put a gap down to the 139, 138.50 level. So right now we're in a sell the dollar attitude. So we're looking at dollar yen, looking for levels below and breaking out in support. Euro dollar, we're looking at levels above, breaking through resistance. Sterling had an interesting move. Sterling, the British pound, cable, trading 129.30. A little bit of an outlier here on the back of what happened the past week with tariffs and the disturbance in the system. Came off a high of 131.95 last Wednesday. Remember now, this is sterling dollar. Sterling's a dominant currency, so when the number goes up, that's dollar weakness. Sterling strength, number goes down, that's sterling weakness and dollar strength. Unlike what happened with the euro and dollar yen and the index, sterling sold off from 131.95 down to the current level of 129.29, had a low 128.70. So an unusual move in sterling. So euro sterling dominated this trade clearly. Below here, this 129.20 level, 128.57. Above here, we're looking at, again, we had days and weeks of a tight range. 129.40 above here. Then we'll find 130, the figure. Above 130, the figure, 130.70. On the downside, below these levels of 129.17, 128.60, 127.35. So for the week coming up, I think we're selling rallies and stocks, depending on what any Fed headlines occur. We're buying bonds, selling dollar, watch sterling, primarily moving through euro sterling. Dollar index, got to sell rallies right now. But I think this turmoil passes. I think this will be good for the U.S. And of course, right now, the bond market's doing work for the Federal Reserve. The only thing in this market report that has the Fed on our radar is the Fed's 20-year intervention in equity markets, unlike we've ever seen in the past. Since their new monetary policy, their new experimentation after the Great Recession, zero interest rate policy, quantitative easing, the twist. The Fed has become the savior of equity markets. Lots of people want the equity market to be saved for obvious reasons. I remind you, of course, stocks go up and stocks go down. In any event, President Trump is using his rhetorical platform to encourage the Federal Reserve and Jerome Powell to cut interest rates again. Trump's tariffs are inflationary. There's no denying that. So the Fed's in a bit of a box. Anyway, play equities from the sell or rally perspective until we get a headline from the Fed about an emergency meeting or an emergency rate cut. And of course, we're going to be off to the races to the upside. We'll recover those 1,000-point moves in no time. All right, that's all I have for you right now. Always try to buy American.